Hi everybody, Brian here from quantlabs.net. Just wanted to go over a big lesson to be learned from this current strategy, which is really important to pick up on. What you're looking at is the usual J4X from Duca's copy. Strategy has been running. Just wanted to let you know I was doing a live stream. This started to happen. This is maybe an hour, 2 hours ago, regarding a live stream that I've taken down now. But I just wanted to show you along here, this in the purple is the minimum and max. That's equivalent to a support and resistance. So we took on a position about here, and the trade was doing okay. It was up about $1 or so. Then all of a sudden some sort of event came along and pumped up the price. We're live. The position went pretty crazy, and at this point it already had hit around maybe $2-3, and in seconds it went up to $4. And then obviously my strategy with the amount of bugs and stuff that I'm testing didn't dump the trade as it should have here. So it closed it out here. I think I did that manually, but it missed this huge upward momentum. What I said in the previous video that has now been removed, the lesson is if you are applying here in the positions, if you saw one, this right here is the broker P&L of that position in real time. I'm using this as a way now to measure my real P&L, not theoretically guessing at stuff. Another thing I'm now looking at is margin. So we have positions and then orders, and we can have multiple positions for a particular order. So when you look at a position somewhere, you're using your margin, and you need to understand that that's how much margin you're using against your account, which in my case is a demo, but it doesn't matter. It's something that I'm watching very carefully. Another lesson to be learned from what I saw was in the positions here, you'll notice that you can signal back to the broker your stop loss and take profit, which I don't do. Now, this can work against you in these scenarios because most people are probably going to put a stop loss of a little bit over here, but when you get scenarios like this, they'll just jump up all of a sudden. And this, it went up from $1.30 to just over $4 in a matter of 2 minutes, and there was just sudden volume hitting and some kind of news event. I'm sure I could probably figure it out, but let's just say there was. And then you wanted to capture that profit and let it ride. But most people would, as I said, would have applied a take profit, and then that would have kicked them out of the trade. They would have lost all this upward momentum. So that is clearly one of the big things I want you to understand. Playing around with Duca's copy, I put up a video on evil bots. I'm not sure who's controlling that, if it's another algorithm, but it's clearly funky stuff going on. And basically I just wanted to show you this. So here as a programmer, we have many, you call them talents if you want, and basically I've shown this before. So here's the log. The important stuff you want to track is this, and this and this. What happens is when I put on a position as this position opened up, that I just showed you right here, and there's a couple of signals that I want to talk about, very important. One is shorting and longing. I have found from the last few months testing this thing that you go short, you have more chances, higher probability of having shorts work against you. And you won't know until you work out your P&L, again, the P&L from your broker. Okay? And in this platform you can see it. I don't know how it is in other platforms, nor do I care. But that is critical, because what you'll do is you will think in your case that you have positive, or theoretically positive P&L in this case, which was a short, and you think you have profit, but actually you don't, because, well, you get in a confused state, and you end up not getting a positive P&L that you thought while you're shorting. So one of the big lessons I'm learning right now to save confusion, to eliminate testing and pulling my hair out basically, is just have this strategy long only. Of a higher probability of profiting off of longs anyways, so why right now at this phase, call it a newbie phase, confuse and muddle the water with shorts and just focus on longs and try to get this thing working, which I think it does. But it's just the shorts throw it off. Another big lesson to be learned here is margin that I forgot to mention. When you look at your used margin and you are not using or you're not setting your stop loss and take profit with your broker, I think theoretically, I could be wrong on this, your used margin is going to go up because you're not signaling back to your broker your take profit and stop loss. So as a result, you become a higher risk to the broker. So they'll increase your used margin quite a bit, and it can get quite expensive. So I think that is something I need to really sink my teeth in to understand, but that is something I need to figure out. Because if they know your take profit and your stop loss, they know what your target levels are, so that reduces their risk. So they'll probably lower the used and required margin needed for your trade. Okay, so that's a very important lesson I just wanted to make sure we get. Going back to the spreadsheet here, this one is, I'm about to show you, is the order log of minute bar. Now, I just showed you a minute time frame, okay? Now, what I do in my strategy through the API, I log every minute, every bar that comes in, and I track it to track the P&L from the broker, as well as some other metrics that I use, namely max P&L, min P&L. Not only that, but here I'm tracking as a test, let's say Bollinger. And Bollinger, I will tell you, is all over the map. I'm not a big fan of it. Theoretically, if you're just working off of charts and doing it discretionary, fine, I get it, and I know it's popular. But this just further complicates my processing on my computer or my strategy, and it just chews up a lot of threading that, to be honest, is not needed. I've talked about this before, and you really want to keep your indicators simple. In my case, I'm using number of trends, rate of change, as well as trend line stuff. Very simple calculations, including linear regression, which seems to work really well. A few other tips I can give you, which are really important, is this one. As I said, this is the P&L from the broker. You can see here, this is a time stamp of that bar, okay? And you can see here how frequent these bars are. Maybe you got three, in this case, 3 bars in 1 second, 2 bars in this second, 3 bars. Now this does chew up a lot of hard drive space, obviously, but one of the biggest things that I found is that for me right now, the biggest thing I'm finding is this logging and logging all this data, because logging all the data is important, and it helps me understand what's going on at the strategy level in real time as it happens. And the best metric is, again, is this P&L that you're seeing, and that's from the broker. And I get to see exactly what I can expect when this position does get closed out, what I can expect to see in my reports from the broker, and most importantly, when they take out slippage and commission fees, I know exactly what my net result will be on that particular position. So again, I'm really becoming very critical on P&L from your broker, from the gospel, literally, instead of having to argue with your broker on what you think your P&L should be on a particular position. Well, here in this case, in real time, we get to see it. Very, very important. Okay, so let me just see where our position started at. So right here. Okay, so that monster trade that I just showed you in the chart is right here. Now you're always going to have a position opening in negative because of spread and some other calculations. But I just want to show you a pattern that I think is very important to see how your position will play out when you meet the criteria for your entry. And we've talked about the entries that work out fairly well, so I'm not going to do that in this video. The exit's usually the hardest part of this whole thing. So what I'm finding here is, yes, you will open with a negative P&L from the broker, but usually after a certain amount of bars, you can see here that the P&L doesn't really go negative. Okay, I'm going to show you some other scenarios, but it does go negative. But let's see, at what point does it start to profit? So you can see here, boom, boom. So after 69 bars, our P&L becomes profitable after the 69th bar, okay? That's how long it takes for my position to start to make money. So you can see here as the position evolves, the amount of bars it goes up, the profit's still bouncing around at zero. You can see here in this column H. But as it starts to bounce around, even in negative, now you can set your indicators to a certain amount of parameter to allow this negative evolution of this position. And you can see how long, but it's not declining as fast, right? So at some point you can go, okay, this is the hard part about in the whole trading. At what point, if you're negative, as in here, does that mean you have a losing trade? And if that starts to get out of hand, you know, maybe you can set your stop loss 10% or whatever your volatility is on that position at that time. There's different calculations that you could use. But here you can see that the position, again in column H, stays profitable. Okay, and it stays profitable. You know what? As long as it's profitable, why don't you let that position run? Okay? So you can see here we're at 1,000 bars. I don't know how much time difference it took to get to this level. But you can see here, it does hit some negative, but it's not too bad. But you can see how this log becomes so critical in analyzing how this position evolves, right? So you watch this, but it's not, like here, it's still profitable. So you let it run. And again, you're not applying any stop loss or any take profit, but as you let it run, boom, boom, you know, it's bouncing around, but it's still profitable. And we're already over 6,000 bars. Okay? You do the math on how long that takes. But if you let this position run, okay, now we're starting to get places. Now it's at $1, full dollar, and you know, you could cut out, if you had a take profit at your broker, you're going to lose out on those trades I talked earlier about, that momentum that we talked about on the chart here. So you could be here at $1, which is usually your case around here. But guess what? As long as your position stays profitable, let it run. And you can see what happens. If you let it run, it can do really well for you. In my case, it hit about $4. Right? So that's cool. Let that profit, let that baby run. That's how you get these monster profits on your positions. Now look, here it's $1. There's $1.40 somewhere. And maybe you've seen some of these. I look at these logs. I'm going, holy moly, this thing is doing really good. And you're thinking you're doing good, and it's going up, bounces off a little bit. Fine. But as you saw earlier, you're going to let this profit run, this position run. So now look at your profit level. Okay? Now, the key of this video that I wanted to show that unfortunately I didn't keep. I just want to show you how fast that profit level went up. It was an incredible run. It was definitely a news story, as I said. But you can see here it was always bouncing around like a boom. Yeah, so it was bouncing in and around here for a little while. And then all of a sudden the velocity of the profit just took off like crazy. And it went up $3 in a matter of about 2 minutes. You can see how fast it just went up. That's what we're talking about. That's what we're looking for. You can see $1.03, $2, a little bit $2. Then it just started to jump up really fast. So that's where other algos, I'm assuming, jumped in. And there's no way a human trader would be able to see this on a minute chart. So they would have missed out on this opportunity. Right? So it goes up, boom, buck, 420, 424. And your system, if it's smart enough and well designed enough, you could have taken profit right there. You could have let it run, have your little, call it scanner, and if it drops off after a certain percent, almost hit $5, 472. Once it hit and it starts dropping, get out of the trade. And you'd be up about $4. And look what happens. It just drops. Still bouncing at $4 P&L. That's pretty good. I've seen it go as high as $15, my throat. So you get these profitable runs, you can do very, very well. But the only way I think you can do it is automating your trade. And if you're with a crop broker, chances are they'll kick you out, find an excuse not to get these profits. And again, I've talked about it millions of times. MetaTrader 4 or 5, doesn't matter, is usually your red flag. Okay, so as this strategy is still running, you can see it. It is running right there, that little green, or it's supposed to be a green triangle. Now, as you know, hopefully you've seen my Redis videos, how I use Redis, the database that alleviates a lot of the processing. These are some of the trades that happened over the last hour or so. We got a short, we got a buy. Now, if I looked at the same log or file, I know that all of these are losers. Okay, and I'm going to tell you why. The selling, here's two shorts. Almost 75, I'd even say at least 75, maybe 80% of those positions that go sell or short are always losers. Negative P&L. We don't want that. We don't want that even as we take on trades, okay? But usually with my buys or long, I have a better chance at profiting. Now, I know people go, well, gee, Brian, long only usually does not perform when you mix up the long and short type of portfolio and strategies. I agree with that. If you're running on an institutional or some kind of professional broker, maybe you may get some legitimacy with interactive brokers, I don't know. But again, do they have the ability in the API to track the P&L live, real time? Okay, so consider that. And on top of it, as a retail trader, we're not dealing with institutional level exchangers or brokers. We have to deal with a lot of these small retail broker kind of brokers and exchanges. So in this case, Dukas Copy is what we work with. But you can see here, we're losing at negative 27 cents and negative 14 cents, right? Boom. Okay, so what we're going to do is we're going to go through these logs. I want to show you the difference between a typical monster trade and how it forms, how it historically evolves. So hopefully you'll remember the other monster trade that I just showed you. And here, Japanese yen. Okay, what I want you to look for, very important, is how this position opened up. And here. Now again, this is a live a P&L from the broker on this position. Forget all your indicators. This is your P&L. Okay? So once this position opened up, and it depends on your timing too, but there is something I'm noticing that we can all be on the lookout for. If you follow this methodology of logging your positions as they evolve once they are put on. But right at the beginning of, we got to get to bar 1 basically. Okay, literally, no. We want bar, okay, right here. Boom, okay, see our P&L and where it's at? It's very small. It's going to be a loss of negative 4 cents. Question is this an indicator of how this position will evolve because of that minimal loss at the time I take on the position? Whereas in this case of the other position, and it closed out at negative 56 cents, I mean, that's a short, but we don't care. That's the position of the P&L from the broker on this position, right? So here we are actually up, and my theory may be actually blown out the door, but here you can see how radically quickly it went down on the P&L, regardless of how we think our indicators are showing. That P&L is definitely dropping pretty quick, and if that's the case, as the strategy is supposed to do, it cut the trade. Okay, so let's take a look at some other positions here. So I'm not sure this is rocket science for anybody out there. I don't think it would be, but again, here we got a short right here, and it opened up at negative 18. It bounced around. Once again, that P&L wasn't as close to being stable at 0, but once it starts reaching a certain level, the volatility or the velocity, I like to use the word velocity, of how fast it moved down, that tells you right there that somebody don't like, or somebody's working, or something's going on with this currency at that point, and the losses just increase very quickly. Okay, so maybe, just maybe, we can use that as a measuring stick of the velocity of how fast that loss is, and just cut the trade. And it just stayed below 0, and after 333 bars, or 133 bars, it cut the trade. Okay, this is how random the markets are. Next position open up, same currency pair, shorted, and once again, our theory is that a P&L of 0, and then look how fast it just dropped to negative 29. Bounced around, and it just kept dropping pretty fast in a matter of, the loss just doubled in a matter of how fast? 10-15, 20-10-15, right here, down to negative 56 cents. That's 20 something cents in a matter of 2 seconds. And it's things like that that would make me go, huh, maybe the velocity of this just is just dropping very quickly, and get out of the trade. Slows down here, and yeah, okay, so close out the trade here, new position. Now, okay, now we're dealing with a buy, a long. Okay, so comparatively, we already know we're not off to a good start. Because if we looked at the other, the really monster trade, we started. Let me just share this here again. So we open up with a negative 18 cents on that first bar, and we started with bar one. No, I'm sorry. Right here. It's not so bad at 4 cents, but you can see it stays pretty close to zero for a while, but it doesn't drop off as fast as the others, and it still stays close to zero, but it doesn't drop off as fast. And then once it hits negative or positive, what do we care, right? Once it's positive, just let that position run. That's what we want to do. So once you hit your negative P&L, in this case here, watch what happens. It just increases. Look how fast it just drops from here. Okay, negative 15, 23, 51, 391. 391 is microseconds, or milliseconds, sorry. So we're 15, negative 14, in the same second, and boom, it just drops pretty fast right there. From next second, and it just drops at 15 cents. And it just kept dropping. So the velocity of that is pretty stark. Like if it's not staying close to your zero, as in that big trade that we just showed you, I think it's safe to say you may want to cut this trade to minimize that loss. So I just wanted to go over with you on the things that I'm seeing, because I think this lesson right here, how this evolves, is very important to see if your strategy will stay profitable, or sorry, your position will stay possible. How your position will stay profitable or very close to profit. If it doesn't, I guess in this case, drop below, let's say, I don't know, 20 cents. Yeah, I think 20 cents is a good benchmark. Yeah, and then let it bounce around. All right, but I want to talk again about the importance of these logs. Here's how I do it. So today is the 1st of January 26th. As we just heard, we got a position to take on. Let's see how this works out. Okay, so we have a long. Let's see how this pans out. 44 cents. Oh, okay. So what we can do here, that was Euro, Swedish kroner. Okay, so I'll take a look at that position in a minute. But here's some lessons. Oh, here we got the chart. Oh, here, big drop, but my system didn't catch it for whatever reason. Here is what happened visually in the chart. Okay, so this thing quickly went against us. I don't know where the entry is. Where's my entry? It's probably down here somewhere. I gotta work on these charts here. But okay, so there's the order right there on the sell, but obviously it was a big loss. But somewhere in here it didn't. Oh, here you are. think no. I have to have better indicators here. Anyways, let's go back to the log and we'll analyze this current position. But the point is with Duca's copy, I've talked to somebody who's pretty experienced with this. I've been doing it quite a while. Knows some of the key people at Duca's copy. That's how well he is. But the point is, when you use JForex, because it's in Java, you're able to track all these logs. And the cool thing with the kind of analysis I just showed you, I can write Python scripts to easily go through these logs, right? This is my order log, and I'm able to track the position as it evolves with all the key indicators that I want, as well as the profit. This is really critical to capture that, because you learn from it and you can build more rigid strategies because of it. And that's so important. You understand it, you understand how this moves, you log it, have the capability to log it, you're going to go places. I really think, I'm really adamant, no matter what forum you read, if you talk to, as I call Cousin Johnny, whatever book, but you really want to get into this, really learn and log this stuff, the detail of it, minute by minute, 2-3 bars a second, and I can write scripts to analyze this and see why. And as I said, like right now, just in this video, we figured, oh, maybe the velocity, not volatility, the velocity, not the volume, the velocity of that trade. We can get down to the granular level to see how that position evolves. And we can know right on that level, with no real indicators other than the velocity of that trade and the volume of it, let's say, to track it, to cut the trade or not, based on that alone. Okay? So this video in itself, theoretically, will give you some really good tips on what to look for. Now, the other thing that I do with these logs, you see how many logs I have here? These are just the orders as I just showed you. Let's see if I can pull up another chart here. No. Some of these charts are really big. Let me pull up this one. These are just random ones. I don't know what they contain. Okay, let's hope that one gets loaded. Okay, I guess not. All right, so let me pull up these kind of another key that I found that was really helpful, folks, is this. Not only am I able to track the positions when they are put on or not, I am tracking everything for averaging out trends at that point in time. I get to see open, high, low, close, and the volume. The volume's a key one. You can see here, tick by tick by tick, you can see the volume differences between each one. That's why I like the rate of change. Very key. You can also see here, regression is something I use clearly. I'll tell you this with the regression, when you round it to 3 decimal places versus the whole thing, you get regression of maybe 5-10 decimal points. It shows you, just based on that slant of that linear regression, how steep that trend is, if it's down or negative. And I use that as another measuring point. And it's very quick to use to really help in the measuring of how each bar is evolving while you put on that position. And the other cool thing is, well, I might as well blab here a lot while I'm at it. Here, which is really important, a couple things. We've talked about this before. Heap size, the size of your, what you make available in your JForex in my case. Why? Because, let Let me see if I can put up market overview right here. This gives you all the major currency pairs. Here's all the available instruments. But let me just see here if I can find what I'm looking for. Market overview. Yeah, we don't want that. I think somewhere reports, news, service. Basically, what I want to show you, and if you've seen any of my previous videos, you'll know I'm watching over 40 assets. So this thing's like a scanner, watching 40 assets at once in real time. Now, here you'll notice, let me think here, there's no threading issues here, but you will find if your system's not got enough memory, you will get threading as a problem, and that can really screw up your whole session of your JForex. Is not what you don't want. Okay, that's another big deal. What else? Oh, yeah, I gotta make sure your charting can be taking up a lot of memory. That heap size is important. I got a video on that for the platform, and I'm just trying to think out. As it says, you can see it's a demo account. I'm sure there's so many things I've learned in the last few weeks, months on all this, because the debugging is just so helpful. As a human trader, you're not going to get it. You're not going to get that kind of functionality with MetaTrader, I don't find. JForex, yes. Yeah, I don't know what else to show you. Pretty crazy stuff. Oh, haha. That's in here. Just so you know, I have the ability to record or take a snapshot, screenshot of the charts. So if I look at my positions, just get back to my spreadsheet here. This one. So my case, this is the name of the position right here. 151186 ending in 186. That's the Australian Japanese yen. In here I've got my charts. Here you can see I track both the entry and exit of each one. Just sort here. So we are looking for 186. Let's see if we can find it. 151. This would have been earlier today. I think Australian Japanese. I think we are dealing with here. This is the entry, if I'm not mistaken. Okay, so you can see here, right there, that's when that position is put on, right in there. Okay. Let's see if we can find the corresponding exit. This is still got a lot of bugs. There should be a exit. Oh, I know why. I remember I had to exit out of that manually, so there's no snapshot of that position. But I've learned a lot here by doing all of this debugging and putting the messages in logs, as well as a CSV file with all the necessary data I want. I've got lots of videos on this, but I find, as I keep saying, if your broker does not allow you to see their P&L for that position as it evolves, you're going to have a really difficult time to sync up the broker. Now, also my reports. The reports say a lot as well. I've shown those, but you'll clearly see the slippage as well as the commission, when you net it all out. So, okay. So what I want to show you, we just got a position, because I blabbed a lot here. So as I said, we got a position about, 20 minutes ago or whatever. Let me just update this. So this is the position that we had. It was a buy. This is the Redis desktop manager, and this is the latest in the database. So we know, I just know this by heart. This right here, this field is negative 43, negative 0.43. That's the loss on the position when it closed out. Not good, and that's a buy as well, as you can see. How many bars did we get? 40 bars. So my system did close it out as it should have, but prematurely. And this is the dilemma I go through. At what point do we not think the position will go profitable if I let it run and give it the opportunity to run? As I said in this video, I think one factor I have not factored in was the velocity on the downside of that. So if it's too much negative positions cut or bars being produced, and it just keeps rapidly dropping, it's safe to say you want to cut the trade. Whereas the other position, the Australian Japanese yen, which turned out to be a monster, like $4 or whatever, that was clearly a scenario where, as I said, it bounced around, did not go below negative 20 cents, but it did bounce around, but it quickly came back and it stayed profitable. Once it stays profitable, let that sucker run. It does not hurt. So these are the things that I look for from the logs. And I know that now as a new indicator I can use for positions that are, portfolios with a long only, and look for these scenarios on the downside to calculate it, because they're really tough to gauge, but the velocity of those losses really make a difference, because that's algorithmically and or human traders just diving in to get out, or they could be short as well, who knows, but you don't want to be on the wrong side of that trade. So there you go. I just want to put this video together. I think from my point of view, this is probably the most useful one. And how fast you can make money in such a short time frame. It's incredible. Anyways, I just want to show this to you. Hopefully you'll find this helpful. And I've got just since this video's been up, I got two orders of people buying up my $47 course on how to program with Duca's copy, programmatically or not programmatically. You can find it, and I'll promote those two courses more often just to get people interested. All right, we'll talk to you soon, and have a good day.